61% of Americans, 48% of Australians, and 15% of Japanese are living paycheck to paycheck. And it's become even more difficult with increasing inflation and interest rates. If you want to break from this cycle and build a stronger financial situation, you need to figure out whether you're doing something wrong or not. Despite having a business degree and a lot of very good jobs, it took me years to figure out what I was doing wrong and build a more solid financial situation. Since then, I have a lot of investments, retirement funds, and this beautiful house. If you could change any of these 9 habits that we're going to talk about, you'll be in a better position to realize your objectives and have a better financial situation. You're not paid enough. There's too much inflation. Your banker and your landlord are awful, and there's nothing you can do about it. I agree with the first 3, not with the last one. You need to stop running. You need to take a break and look at the situation as it is. It's not sustainable. You're gonna hit a wall. It's obvious. It's not easy to tell yourself, I'm doing something wrong and I need to change. But that's the first step, admitting there's a problem. And for me, to fix a problem, I need to see it. And I'm probably not the only one. So what I did, and what a lot of people are suggesting you should be doing, is taking a piece of paper and listing up your income on one side and all your expenses on the other side. You can take a bank statement if that helps you. On the expense side, you need to list up all your needs. By needs means the expenses that you need to live. Your grocery, your utility, your transportation, your medical expenses, and paying your debt. All the rest is just wants, something you can live without. And you can see that too much money is coming out. You know where the enemy is, you have identified the enemy is. Now you know you can fight that enemy. It's just in front of you. This is a very difficult step to admit that you are doing something wrong. It took me a lot of time, but that's the most important step. Because if you decide that, you decide to change, you have an objective to change, and the rest is going to be so much easier. When you get your salary, usually pay your expenses, pay your debt, and then save what's left. But usually there's nothing left because you need a bit of entertainment as well. That's normal. That's the way of the paycheck to paycheck, and that's not the way the rich people do. The rich people pay themselves first. This is a concept I learned from Robert Kiyosaki when I read his book, Rich Dad, Poor Dad. Let me tell you how it works. For every dollar you receive, or euro or yen, for every income you receive, you take 5, 10 or 15% of the top immediately, and you send that to a saving account and you forget about it. You're going to tell me, it's so difficult. I already have problem making ends meet. Hear me out. Our brain works in a great way and sometimes in a weird way. If you take automatically this money every month, you're going to rewire your brain to thinking of working with the remaining 90% in case you're taking 10% off. And it's going to work over time. I know it's weird, but that's how our brain works. So let me tell you exactly how to do it so you don't even have to think about it. On the day your salary comes in, you create an automatic transfer directly to a saving account that is not linked to your credit card or your debit card, so you cannot touch it. And automatically, every time your salary arrives, you take 10% off, or maybe it's 5% or 15%, and it goes directly there. You don't see it. So when you open your bank statement or your online app, you don't see it, and you just work off of the remaining 90% or 85% or 95%. And over time, you're going to start putting money aside. That's how paying yourself first works. As I mentioned, I discovered this principle by reading this book. If you're interested in me reviewing all the business and health books that are helping me everywhere, pun intended, please let me know in the comment below and I'll make a video about it. 37% of Americans are unable to cover a $400 emergency with cash or equivalent. And I'm not referring to the recent US Vice President comment. I'm referring from the data from the Fed that I'm linking down below. $400 is not much. It's your car breaking down. It's an emergency that you have for health emergency, for example, your kid falling down. It can be anything. And if $400 or $500 is all it takes to get you in a lot of trouble and to have to borrow money and repay and have additional debt, then that's a lot of anxiety for you and your family. So what can we do about it to get ahead of the game? We just talk about paying yourself first, putting money regularly, taking 10% off your salary every month and putting it on a saving account. That's exactly why we're doing that. You're going to continue putting this money on the side until you reach $400 or $500 as a start. And as soon as you reach that amount, you're going to take that money and put it in another savings account. This is going to be your emergency fund. And then once you have those $400 or $500 on the side, you're going to have a great peace of mind because you know that you're getting ahead of those 37% of Americans already, and you have a bit of cushion in case something happens. When I was younger, at the beginning of my career, I used to hang out with finance types. They were really great guys, and they still are, but they were making so much more money than me. We were going out, drinking, eating, and I was spending way much than I should have. Fortunately, I started becoming very, very busy and I couldn't go out so much. But if it hadn't been the case, I could have gone into a lot of trouble. Do you know people like that? That are changing phone every year, changing shoes because there's a new one coming, or buying a new car, or partying all the time? Maybe they bring you along, and that costs a lot of money. Honestly, they're not getting rich. What they're doing is looking good and going nowhere, as Robert Kiyosaki said in the book I mentioned earlier. It's really important to understand that life is not like Instagram or TikTok. There are realities, and not everything is the way it looks. And there's a good concept to remember, and this one comes from Suze Orman. What she says is that we have to live within our means, but below our means. It's not easy to get out of that cycle. Trust me. But what about, rather than going out every week, you go out just every other week? What about not buying a new phone every year, but every other year? Actually, a lot of experts are recommending doing the following about shopping. Whenever you're considering buying something that's not a need, something you need for everyday life, but a want, you need to pause and ask yourself, do I really need this? Is it going to change my life? Or would it be better to use that money and save it? Or even easier, rather than buying on the spot, wait 48 hours. That's 2 days. Another way that's recommended is when you go shopping, you use a list, a shopping list. I know, you can put it on your phone, you don't have to write it on paper, and that sounds a bit backwards because you only buy what you need and you're not tempted to buy something you don't need, whereby saving money. Another tip that's given regularly and that I apply to myself is I always go shopping not with a credit card. I go with cash or with a debit card. The reason for that is that you cannot spend more money than you actually have. You can't put it on a credit card and pay it later. If you overspend a lot, you probably put a lot of money on your credit card and you end up being like the 56% of Americans who do not pay back their credit card balance in full, ended up paying 24.37% of interest rate per year. That's a lot of money. You end up just fighting your way to just pay those very high interest rates and repaying your debt. It doesn't have to be this way. If you follow the previous point, you should be able to stop overspending. Then you can concentrate on repaying your debt. Let's start with the credit card debt. You're going to spend your money that you're taking from paying yourself first. After you've put your initial emergency fund together, the remaining money over time is going to be the money you're going to be using to repay your credit card debt. But you're going to tell me, I have 24% interest rate, how do I get along with that? There's actually a way to doing that. It is by using a balance transfer card, which is basically another credit card with 0% interest rate for a set period of time. You're like, what the heck? Why do I need another credit card if I'm trying to get out of credit card debt? Good question. Hear me out. Those cards have 0% interest rate for a set period of time, as I mentioned, so you can use this time to repay your credit card debt before the interest starts kicking in again. Usually it's 24 months, 2 years, and that's going to be your only objective during that time, is to repay all of your credit card balance and not add any new one. Otherwise, it doesn't make sense. I'm linking a video down below that, and you can also see it on screen, from Rob Berger, that explains exactly the details of how it works and the best one for 2023. So check it out, because once you've cleared all your credit card debt, you're going to have more money to do other things, starting by repaying any other debt you may have. Maybe it's a student loan, maybe it's a car loan. We're talking about all the debts that are not related to your mortgage, the place you are living in. Anything can happen in life. You can suddenly lose your job, you can suddenly have a medical emergency, or you need to take care of a loved one, and you cannot work, and you're not receiving your salary. And if you are the main breadwinner in your family, you're putting your family in trouble. That is why you need a fully funded emergency fund. What I mean by fully funded emergency fund is we go over the $400 or $500 we discussed in the previous one. Now what we want to do is making sure we have 3 to 6 months of living expenses ready for you. The way you do that is still continuing paying yourself first. On top of the $400 or $500 I mentioned before, you continue putting this together until it reaches that number. And then, if anything happens to you, anything, and you can't work for 3 to 6 months, you have money to provide for yourself and provide for your family. What a wonderful peace of mind. All the hard work you've done into controlling your spending, repaying your debt, and having an emergency fund means nothing once you're done and you don't have a goal to go a few steps further. How do you wake up in the morning and get motivated to continue? How do you go and bring yourself back up together when you stumble? And you will stumble, we all do. It could be putting money aside for down payment for house. It could be to put money on the side for your child education or for your retirement. It could be anything. And when you put a goal together, it has to be very precise. Otherwise, it's very difficult to follow and to remember. There is a way of doing it, and it's called the SMART goal setting. What is SMART, you're gonna ask? SMART stands, as you can see on screen, for specific, measurable, achievable, relevant, and time specific. Mine is to become financially independent so I can provide for my family in case I lose my job, and I want to do that within the next 10 years. It's a difficult goal, but I have to work on it, and I'm already working on it by using the next step. But before I go to the next step and the next advice, I want to know, what goal do you have in mind for your finance, for your future? Let me know in the comment below if you feel like sharing. Rich people pay themselves first, invest the money, and make the money work for them, rather than working for the money. That's what people living paycheck to paycheck do. If you're working as an employee, you are being paid a set salary for the number of hours that you're working. And maybe you'll have some bonuses if you're doing extra, but basically you're receiving money based on the number of hours that you're working in a day. And even if you are an entrepreneur, but you're working with your hands, you're limited by the number of hours in a day. You can't work 24/7. That's why you are working for the money, but the money is not working for you. To making sure the money is working for you, you have to be able to use money to invest, and that it's producing money even when you're not looking. So in the previous steps, we are able to get out of debt and continue paying ourselves first. And we also have an emergency fund. Once all of this is done, you continue paying yourself first, but that extra money goes into investments that are producing income. This could be any kind. I'm giving you a lot of ideas, and there are many more. The key is to be able to get money, invest it, so your money from paying yourself first, and making this money work for you independently on the number of hours you are working in a day or in a week or in a year. I know nobody wants to come to YouTube and talk about taxes. Nobody likes to talk about taxes anyway. But taxes are important, right? We pay taxes and in exchange we receive security, infrastructure, transportation, education, maybe retirement and health benefit. That's how our societies usually work. But does this mean you have to overpay in tax? I'm not talking about doing some dodgy things. Everything I'm talking about is legal. But when you're investing, like we are talking, and making money work for you, like we are talking in the previous point, you can do that and limit your tax bill by doing something completely legal that has been set up by the government. The tax code is made in a way that you can reduce your tax liability by investing in certain ways and putting in your money in certain ways that the government in the country in which you're living wants you to put the money. Maybe it's for development. There are a lot of reasons for the tax code to be the way it is. You should take advantage of it. And maybe you're like, I'm okay paying taxes because I like to give money. That's great. And I like to give money to charity as well. Both feel good, and I think it's really important to give a certain percentage of your revenue to charity for people that are not as well off as you are or are falling on hard time. And in most places, if you're giving to charity, it also has tax advantages. So you're getting the best of both worlds. So again, I'm not telling you to do anything illegal. I'm just saying that you should care about taxes because it's important to use the tax code the best way possible. A few changes can make a big difference and help you break away from the paycheck to paycheck cycle. Hopefully, you found a couple of ideas here. If you're interested in a similar approach for similar results, I recommend this video. If you like this video or learned something, please give it a like. Consider subscribing for more content to come and do not hesitate to give me any comment below. Thank you again, and until next time, goodbye.